All right, guys, this is going based off of today's trade or the market that we saw today. We had some conversations in the trading room about the entry zone and timing for your trade. This morning's market, as you can see, it really pushed down really hard, and it had a quick drop and then a really pretty significant rise. And that will happen. There's a lot of volatility behind this, and quite a bit of momentum. When that happens, sometimes it makes it difficult to find an entry even off of a good setup, simply because I often trade a 2-minute chart, but we're talking about an entry zone that oftentimes on a 2-minute chart gets passed with the kinking candle. To demonstrate, we'll use this first stair step here in the market. We've got the high here where the market opened. It pushes down, comes back a bit, retracing, and then creates a lower high. Well, this definitely does the same thing on our tricks indicator here, giving us a strong negative slope on both areas. This is what we want to see, and of course we've already pre-qualified this by our MACD crossing into the short position and our SMA indicators also in the short position. But when we've got this set up, this is the thing we want to look for. I commonly teach, let your kinking candle finish before you take your entry. That's just my preference, but you don't necessarily always have to do that. When there's a lot of momentum, you can take your entry on that candle that's kinking. The thing about doing that is it's a much more aggressive way to enter, and I tend to be on the more conservative side. The way I teach this is the candle that's creating the kink in the tricks. If you look at this, this is creating the kink, and we're looking at the kink that goes back down, not the kink that goes up. We want to see the kink in the tricks where it goes up, where the market's retracing here, but because following that we should see a kink that goes back down in the direction of the trend. And that's what we're concerned about. Well, when this candle forms right here, it starts to produce this kink right here going down. A lot of times it's tempting to jump into the market and just take this as it's going down. But the thing is, if you want to be conservative about it, you want to make sure that this kink is solid, that it's there, that this candle closes and that kink is still there when it closes, because then you can know when you enter on the following candle, you're entering with momentum. It's just a timing issue. That's really all it is. But our entry zone is defined by two things here, and it doesn't matter so much on the back end, although it gives you some indication of where this is. It doesn't matter so much if the entry candle is not crossing through the short-term SMA. But if it isn't, it's not that big of a deal. But the main area is you don't want to be late in the trade. And we define that the end of that entry zone being right here, 1 to 2 ticks below the previous stair step. Okay, and so you can visualize an imaginary line right here, and if you're going to use this as your entry candle, you could say anywhere where this candle would meet the short-term SMA. So that gives you a little zone here. This is what I call the entry zone. This is the candle. Let's see. This first candle is a candle that creates the kink, gets us ready to take entry. This candle is the one that we enter the market in, generally. Now the thing with this trade though is that if we visualize a line right here, this candle opens, it opens past our entry zone. And that's what I mean when I say the kinking candle ran too far too fast. It's opening to a place where if we were to try and get into the market now, we'd be entering too late, and it's really hard to tell whether the market's going to run, a point or if it's going to run 5 points. And so I just consider it being late here at this point, and not trying to take that entry at that point. There's a trick to this that I want to show you though. Okay, so in this example, this was a trade I passed on because it ran too far too fast past our entry zone. But this is a 2-minute chart, and if you find that the market's pushing pretty hard and it's causing your entry zone to get passed on this 2-minute chart. Well, if you pull this up, this is a 1-minute chart. The exact same place on the 1 minute here. Okay, we can watch that the market has created this stair step here for us with the lower highs, and if you look at the tricks, we've got our kink, this candle, and look at that. If we were to draw our entry zone, the entry candle is opening inside of our entry zone. That's 662.5, where our entry zone was laid here off of this 2-minute chart, 662.5. So it's the exact same entry zone because we're taking it based off of the about 1 tick or 2 ticks below the previous low. Same place here. But on the 1-minute chart, we can see that this is pushing down, creating a kink, and we enter with momentum on the next candle, going short. Now that's a way that I've used the 1-minute chart to refine my entries on the 2-minute setups. Now I just want to be clear with that because it's tempting to get in to use a 1-minute chart and you find yourself starting to take signals solely off of the 1-minute chart. Well, the 1-minute chart tends to be a noisier chart. Look how ugly this is, how back and forth. So the 1-minute chart shows a lot more of that back and forth movement. You can see that here with in regards to this this slingshot type of pattern here. So be careful with the 1-minute chart, but if you're using the 1 minute to help you find a better entry point on a 2-minute setup, it can be a really good thing to allow you to find entry points that you wouldn't find otherwise. Now let's just go one more example here. Let's see if I can find, look at this one for example. Okay. We've got our setup here. We've got the high way up here, lower high here, high up here, lower high here. Now this candle was just one candle that pushed down. It didn't give us, obviously our entry zone was way over here, and it didn't even give us a setup anywhere near it. Look at the 1-minute chart. You can definitely see that when this starts kinking, boy, we can enter that right down here. So I mean it won't happen like that all the time, but the 1 minute will definitely allow you to get into some trades that you can't get in on a longer term chart, such as the 2 minute. And it goes the same way for all time frames. You can look at multiple time frames to help you refine your entries off of another time frame. They work. It's very similar to this analogy, using if you're using multiple time frames, let's say a 5, a 2, and a 1-minute chart. You're looking for the tide on the 5-minute chart, on the longer term chart. You're looking for a setup on a wave and entering on a ripple, if that makes sense. So you're using them all in conjunction with each other and making sure that what's happening on one chart is being confirmed on another. So I hope that kind of clears up some things about that entry zone, and hopefully, especially on a day like today when it pushed so hard, will allow you to experiment and try and get into some trades that you wouldn't be able to get into otherwise. One more example here. Let's just show this one going up right here. If you look at this one, this was the 1020 candle right here. This was a very short retracement, and definitely didn't give us a clean entry on that particular pattern. Look at the 1-minute chart, 1020 right here. You can see how this candle started producing that kink down here, and so it might have been an indication for you to be able to get into that much earlier than the 2-minute chart. Really, there wasn't a clean entry on it at all. Let me know if I can help out with anything else, and I'll see you in the trading room.